I would imagine a few months down.
Hello everyone, it's Edevies here, the change analyst, part of the Single Advice Business change team. Today we're actually changing up our webinar a bit. I've got Peter in Newcastle who will run through the engagement pack 3. But for the first 5-10 minutes, I'll actually be running through the business readiness activities with you all. So I'm hoping you can all see my screen. We're also going to change it up a bit today where we ask if you can please type in your questions in the question section on the actual webinar, and then we'll address all the questions that you raise at the end. We'll address any of these questions right at the very end. This will allow us to get through our content today, seeing as we've got a little bit of business readiness, as well as a credit card process that I need to run through with all the State Plus team members as well who are impacted. Okay, so let's get started. Okay, so the purpose of business readiness activities is to highlight some of the tasks that we have identified that teams need to focus on 8 weeks prior to go live, to prepare them for the additional activities that are to come, such as training for the First State Super team members, etc. Is over? Okay. Oh, that's better. Okay. So we'll be tracking the progress of each team member's business readiness activities over a series of webinars. Oh, it looks like the screens are wrong. Thank you, Beck. Sorry, we're just trying to get the presentation up on the right screen. Is that right? No. Let's just keep going because we've got quite a bit to go through. Okay, so we'll be tracking the progress of each of the team's business readiness activities over a series of webinars that we'll be booking in with the relevant leaders and coaches, which is yourselves. The importance of reporting and tracking the progress of your business readiness activities is that it determines the go, no-go decision that is made by the SteerCo committee. The pack that I'm going to run through with you all today is the business readiness pack that will be sent out to you in order for you to communicate to your teams, and will be made up of the timeline, what it is that you need to do, the business readiness calendar outlining when the webinars will be held, the actual business readiness checklist outlining all the activities that require completion, and timeline to give you an idea of when you need to start and complete activities based on your tranche go live date. So this is the business readiness activities on a timeline. So it highlights all the tranches on the side, so tranche 1 to 4. And then we've placed in there over the next couple of months when your pre-go live tasks start, when training will eventually start, and then the checkpoints that we'll be holding by the webinars to see how you're actually tracking with your business readiness activities. Okay, so this will also form part of the pack and outlines exactly what it is that you need to do. Now, one of the main points I wanted to highlight for yourselves as the leaders and coaches, the important role that you guys play, is to ensure that the business readiness activities are communicated to your teams, ensuring that all activities are tracked to completion, and that you attend the readiness webinars that we'll be holding so that you can provide the change team with any issues or concerns that may hold you back from completing any of the activities that may impact your actual go live date. And as a change analyst, my role is to provide any support to you around the business readiness activities and report to the change team any issues or concerns that may impact your go live date. So this is just a sample of the business readiness activity that will give you and your teams an idea of when we're planning to hold the checkpoint webinars, but we're still working on this, and when we do the kickoff business readiness webinar, we'll provide you with the most up-to-date calendar. And this is just a sample of the kickoff tasks. Now, not all team members will have what's known as kickoff tasks. These are tasks that you can actually complete 12 weeks prior to go live, and they include things, it's mainly for First State Super team members, such as the scanning and archiving of any client paper files that you currently have in your office, before we actually begin the pre-go live tasks, which we will then track 8 weeks prior to go live. Now, one of the items in your pre-go live checklist is what's known as another checklist, which is a new starter checklist or a blending checklist. Now, within this checklist, it outlines some of the things that, as an individual, that you need in order for you to start your job on Go Live. For example, any keys to the office, security passes, credit cards, etc. So speaking of credit cards, one of the finance team are actually looking at aligning the credit cards. So this credit card alignment process will impact our State Plus team members who currently have a Westpac corporate credit card. So as you can see, we're planning on moving from Westpac to Commonwealth Bank. So as outlined there, all we're changing is the actual credit card, so changing from Westpac to CBA. The actual expense management will still be done via XM Pro for State Plus staff. And there is a process involved on how you actually go about acquiring your credit card. When we're planning on doing this, the process is to roll out new CBA credit cards. Will actually begin at the end of May, so end of this month, and all credit cards to be replaced by mid-June. So within this pack, which we'll also share on the wiki along with the engagement pack 3 that Peter will go through, all of this will be available for you on the wiki. And any questions that you might have, please feel free to send an email through to the Bob email address. So over the page, this is the process, which I'm not going to go through because you'll have a copy of that. But as I mentioned, any questions that you may have, we do have a frequently asked questions section there as well. Send an email through or refer to the FAQ section.
Welcome everyone. I hope most people can hear me. I know we had a couple on the Skype call. Hopefully they're coming across now. So really the purpose of this session is to walk through the pack together, hopefully call out a few key points, give everyone a chance to have a bit of a look at it and think about how they might deliver it back to their teams over the coming weeks. So again, with questions, the best way to do this, if you have questions, is to send them through on the webinar, and at the end we'll try and answer what we can, and what we can't, we'll come back to those questions either via the wiki or directly to the person that asked that question. So just before I get into it, the first thing I want to say is that this pack is actually, it's a really big pack. I know that's probably not a good way to describe it, but there is a whole lot of content in here, and I guess when you're first starting to think about how you would deliver this to your teams, I would be thinking about multiple sessions to do this. Trying to do this in one big session would take a lot of time, a lot of energy, and I think some of the messages will get a little bit lost. So once you've had a chance to sort of think about timings and different things, I would be thinking about trying to split the pack up over 2 or 3 sessions potentially, just to make sure that everyone gets the time to ask questions, work through the information, and be really confident what's in the pack itself. So I might just jump to slide number 4, if we could. So this slide here, I feel that this one's a good one to really position where we should be up to in terms of our learning so far and awareness, and understand what's in the pack and then what's coming in the future as well. So as you can see here, calling out the fact that there's a range of different topics that's going to be covered in the engagement pack, including things like positioning value for pre-retirement advice and meeting structures, triage and SAT leverage, grow, run. You can see there's a heap of content there and really big topics to work through. You can also see what's coming in the following packs that won't be covered in this pack as well. So this is a good one to spend a couple of minutes on just to really confirm what we've learned and what's to come with the teams. So moving on to the next slide, so slide 5. So this slide's really about calling out the key messages. We had this in the previous pack as well. This should help to really set the scene for what everyone should be taking away from the engagement pack. And you may actually come back to this at the end, depending on how you want to deliver it. Or if you're doing 2 or 3 sessions, you might actually restart your presentation with this as a starting point or as a finishing point. So again, this slide you might take 5 minutes or so, really just to step through every point here and really highlight what we're wanting people to take away from the presentation, and it's a really important slide to spend the time on. Moving through, if we jump through down the slide pack, I think it's slide slide 9. Okay, so this is the start of the first topic. Starts to talk about grow and run, operating model, planner types. If we go to the next slide there, we'll go to slide 10 if we can. Just on the grow, run, operating model and planner types. So this is a concept that's been spoken about. Not in a great amount of detail thus far, but hopefully most of the teams are aware of the grow run terminology. So this starts to play that at a bit more detail. If we go to the next slide, slide 11, sorry. This slide I think is really important just to explain what we're looking to do here and what the grow run operating model is about. You might find, and you're probably going to expect, that a lot of planners will start to ask questions in particular around individual numbers and figures and details around this sort of stuff. I guess just a reminder here, just to stay fairly high level with it. And again, it's really just introducing the concepts that sit behind this so that people can understand, you know, what the grow run model is and why we're introducing it. Again, it can be easy to get caught into details, but some of those details just aren't available as yet. So try and remain fairly high level around that. If we jump to slide 14, and this should be value in defined benefit advice. So this next section, and you'll find there's quite a bit of detail in here. They're very heavy slides, so you'll need time to walk through each and every one of those. But there's 4 examples that you can work through over the coming slides to really talk about how we position defined benefit advice in the future and how we value that. Again, for some people, this will be some new concepts. For others, it might be fairly familiar. So, again, depending on the audience, if it's a State Plus audience, the message might be slightly different. But again, the detail in there is there for you to walk through, step through each and every example, and I'm sure you get some questions from the team as you step through these different examples and some thoughts about how things might work in the future. So take the time to work through them. There's some really good examples there to spend your time on. Again, if you get questions from your group, make sure you share that through the wiki, and we can send that back, answers back through the wiki as well. If we move forward to slide 21, so it's the end of the defined benefit section. Again, similar to the key messages slide at the front, this is a really good way to round off that session, just to for the team to take away, what are the key messages here when we're talking about value in defined benefit advice? If you spend a bit of time talking through this and this is what the team takes away, I think that's a really good finishing point for that section. So the next section then moves into value in pre-retirement advice. If we go to slide 23. Again, we would have, by 22 slides in, we've already covered a lot of content, and this goes into another big part of single advice business, and it's the pre-retirement advice side that for a State Plus audience will be a new way of approaching First State super members. So we want to spend a fair bit of time talking through this, talking through the background, the challenges we have, and the learnings behind that. If we step through to slide 25, please. One big call out here, and it'll probably jump off the page to some people, is the pre-retirement call. So this will be a new concept for particularly State Plus audiences, but First State audiences are probably used to this terminology and this process. So again, talking through this, keeping fairly high level in terms of how this might look in the future, and just stepping through step by step. For those that have been through the client engagement framework, you'll see some familiar type language and processes here. And this is just a good chance to talk about how we will set up our appointments and our conversations to clients in the pre-retirement world in the future. Again, you know, we're not going to be perfect day one, so a really key message here is this is where we're working towards, and this will help us to have better conversations with our members and our clients into the future. The next slide, if we go to slide 26, that'll unpack in a bit more detail what that first meeting process might look like. And again, there's some familiar language for those that have done client engagement. Fully aware that not everyone has been through the engagement framework, but we're fairly confident that those that would read through this pack could understand effectively what we're trying to do here, and the process we would follow in a first meeting for a pre-retirement prospect or member. If we move to slide 27. So this will be a new concept for quite a lot of people, the authority to deduct as part of the appointment structure. Again, bit of detail on this slide, like a lot of them, so take your time to step through that, explaining what the authority to deduct is, what its purpose is, when we use it, when we don't, and as I said, there's some detailed notes on there and to help you step through that as well. So moving through to slide 29, please. So again, by this stage, we've dealt with a lot of different topics. A lot of information has been shared with the team. So I would think if you're trying to do this in one session, you certainly might be struggling with time. And if you are doing it in one session, you might need a break as you move into this section because of the content that's already been covered. But this next part, we actually start to look at triaging and opportunity management in the new world, as well as leveraging the SAT team. So again, it's a bit of I wouldn't say a change of pace, but a new topic in terms of how things operate. So if we step through, we can see we're covering opportunity management, client triage, and appointment bookings, and also talking about shared meeting rooms and different concepts there as well. Might get you through this. There's a couple of pages there on each of those topics. So if we actually step through to the next section, which is on ORS client transition. I know we're skipping through, but there is a lot of content to work through. So this next part certainly will talk to the First State Super audience, First State Super Financial Planning audience. And what we've done here is put quite a bit of detail around the ORS transition. Again, if you've got a State Plus audience, please don't skip through this too quickly, because it's important everyone is aware of the ORS transition and the detail behind that. But certainly for the First State Super Financial Planning audience, this is going to be, right at front of mind at the moment. So there's 5 key points on that first slide. So first one, existing ORS clients will transition to be serviced under the State Plus AFSL. At the same time, the planner transitions to State Plus. So that's a key message. The ORS agreements will be cancelled. Clients will be offered a State Plus life advice contract after their first review post-transition. So again, important just to walk through that detail and just give everyone some time to understand these messages. Thirdly, clients with grandfathered fee arrangements will be managed through Xplan, and that's for their reviews, their fee agreements, their FDSs and SOAs. Important to note that Xplan will still remain operated through that time. Fourth point, at the second review post-transition, which is expected within the last quarter of their State Plus life advice contract, grandfathered ORS clients must be transferred to the new single advice business model. And the last key message there, manual fee deductions and administrative burden will reduce after 12 months as ORS clients have transitioned to the new model. We expect by the end of calendar year 2020, all ORS clients will have transitioned to the new model. So hopefully that helps to set the scene around some of the examples we walk through in the next few slides. So if we just jump to the next slide on 36, please. So this talks about Helen, who's based in Newcastle, has an ORS agreement with a TTR strategy with a $350,000 balance at retirement. Just steps through some examples of timing there. So in September, as the single advice business go live date for State Plus for Newcastle is then, that's when Helen actually transitions to State Plus as well. Review held in July 2019. Again, that at ORS, so she attends annual review and she agrees for a further 12 months at the existing fee. And then it's at the next review, her planner, in conjunction with her, determines the best options going forward. So hopefully this gives a little bit of clarity and helps to understand the transitional arrangements. If we go to the next 2 slides, again, it's the same sort of thing, just gives some content around that. So we might again, spend some time having a look at that prior to the presentation, but it just explains exactly how that process works. If we then jump through to slide 40, please. So again, this will be of interest to really everyone across the group around our APL in the new land. So it's important to note that that we are developing a new APL across both businesses. It's bringing together existing State Plus APL and First State Super APL into a new APL and research list, and remembering to call out the key differences between the APL research list and one-off approval here. So an APL product is where we can recommend new product to the client. It'll include things like retail insurance, annuity and bonds. The recommended list is where a client already has an interest in a product. Very, very similar to the FS list that exists. And then one-off approval process is something that has existed within a First State Super financial planning world, but it's very new from a State Plus perspective, which I know will be welcomed by a lot of people, where the product that we would like to recommend is not on our APL or our research list, and the product that we want to recommend better suits the client's best interest as opposed to one on our APL. So that's a new concept for everyone to get their head around, and everyone will be looking forward to that into the future. If we go to the next slide, please, on 41. We can see here the existing State Plus APL will be expanded to include some of the products from the current First State Super Financial Services APL. On the research list, you can see there's 7 funds called out there. Common funds that we would see clients or prospective clients that have an interest in those funds. A lot of industry super funds there where it may make sense for us to continue to recommend those products. If those clients have an interest in those products, then on the research list being available to us there, we could recommend that a client increase their interest in their additional contributions, etc., etc. And then the last one's the one-off approval process, which, as I said, is a new process for us for State Plus employees, that is, whereas First State Super Financial Services had that for a while. So we might move forward to slide 43, please. So again, there's a lot of topics being covered in this engagement pack, and another topic that's certainly been talked about in the last few months, and we've got a bit more detail here, is around the use of FPIP in our new lands. So the first slide really summarises what FPIP is about. So talks about the main retirement risks that our clients and members will face, talks about the use of a lifestyle income strategy, and the key planning variables that are used to manage these risks, which include tactical rebalancing to ensure there are several years of income certainty, and adjusting year on year for cash flow expenditure. So that's really just a setting the scene slide. If we move to the next slide, 44. It calls out that FPIP is suitable for both pre and post-retirement. And again, where FPIP is most useful is around the retirement risk zone, where sequencing risk in particular is most important. And look, that's what it's been used for many years. So this is to, I guess, share that methodology and the suitability. So the last few points there, we just want to call those out. So the State Plus client segments are suitable for using FPIP outsourcers and coach seekers. Equally, clients can be life advice clients or event fee paying clients and use FPIP. The most important criteria when using FPIP with a client is their commitment to engage in regular reviews. So as we know, FPIP is something that requires regular rebalancing and revisiting and review. So if a client wants a one-off event advice only, and we don't expect that they'll come in for regular review, then FPIP actually isn't suitable for that because it's designed for regular reviews there. So that's really important to talk about with your teams and to think through. So under our new service model that allows for a client to do event advice, but then have a relationship where they come back and they pay another event fee in 18 months or 12 months or within 2 years to review, then FPIP certainly would still be appropriate in those circumstances. But where a client isn't expected to and there's no agreement to come back within 2 years for an event fee client to review FPIP, then it's probably not the suitable approach to take. So this is something we'll need to work through and think through in a bit more detail, but hopefully that answers a few people's thoughts and questions around FPIP. So we'll keep moving through, and we might move to slide 46, please. So another thing for us to think about is around the SAT team and SAT intra-fund advice. I'm in Gosford today, and we had a few questions around intra-fund advice and how that works in a First State Super world. So firstly, I think it's important that we call out what intra-fund advice is. So intra-fund advice refers to the types of advice that a superannuation trustee can provide to members where the cost of that advice is borne by all members of the fund through their administration fee. It's simple, non-ongoing personal advice on the member's interest in the fund only. The scope is actually limited by law to only include certain topics which are pictured on the slide below, and it must be provided by the fund, either directly or by the fund outsourcing to another party. So at the moment, that's FTC and FSS currently doing that, and it'll be FTC and State Plus going forward as the SAT team comes under the State Plus model. So the sort of things that are covered by intra-fund advice, and these are bound by law. Contributions related to the First State Super Fund, i.e. commence, increase, decrease or maintain, salary sacrifice or non-concessional. Income stream advice can be included in that, so moving from FSS accumulation to income stream phase with a retirement income stream within FSS. Investment, so changing investment options within the funds, or insurance, so where type of cover and amount of cover provided by the insurance arrangements within the existing FSS funds. And that intra-fund advice will be provided by the SAT team, and they do many instances of intra-fund advice that stands now, and will continue to do that in the future. So we move to the next slide. So if we just talk through this slide, the maximising super advice service that State Plus provides free of charge to STC members is very similar to the SAT intra-fund advice service. The main difference is the fact that it's not provided under the definition of intra-fund, as there's no outsourcing agreement from the STC to us that applies there, and therefore it can be a little bit broader in its scope. So clients will often be provided max super advice as a client in the build to advice phase. If a client group does not have a First State Super or STC member, this will be a simple event fee bit of advice, and it'll be chargeable from the planner to the client. Okay, so that's something to think through and to try and understand and work through with your teams as we go through this process. So we jump to the next slide just to talk through a bit more detail around that. So what isn't intra-fund advice? So advice to a potential member on whether or not to actually acquire an interest in a fund. So someone that's not in a fund at the moment, we're talking about whether to create a new fund. That's not intra-fund. Advice on unrelated products that are not related to the interest in the First State Super accumulation or income stream or insurance, that's not intra-fund. Consolidation and rollovers, that's not intra-fund advice. Providing ongoing reviews and ongoing advice to a client, that's not intra-fund. And importantly, implementation. So implementation can't form part of intra-fund advice. It's not done by the SAT team. It would need to be done online by the client, or where they walk into a service centre or regional office to get assistance filling that out. The SAT advisor cannot provide that implementation support to the client. Okay, so the other thing there, you'll just see down the bottom right-hand corner, State Plus products are not related products for the purposes of intra-fund advice. So rollovers require advice on unrelated products and are therefore outside the scope of intra-fund advice. This will be one that will cause a bit of interest and questioning, so please make sure you capture the questions, and if there's anything from your team that you need further information about or trying to delineate the differences, please let's get them up on the wiki, and hopefully we can get that answered so everyone can see that. So we might keep moving through to the next slide, 49, please. And we're running short on time, but hopefully we're getting towards the end now. So I think this is a really helpful slide. Again, a lot of detail here, but a really helpful slide just for everyone to better understand the flow of leads coming into the business in the future and just how that works. So we'll see calls coming through from the Member Service Centre, and we can see in pink there, that's the First State Super Member Service Centre based in Melbourne. And so calls will come through from there. We'll have our Client Service Centre, which we know is formerly known as the Hub, with outbound engagement calls and different things as well. They'll then come into State Plus and the State Plus world, where either those calls will be triaged to an intra-fund phone-based advisor, or triaged into the comprehensive world, where that'll be, face-to-face with a planner out in the regional network. There are rules around how those are triaged. So where a member's over 55 and has more than 200,000 in investable assets, we want to triage those to get in front of an advisor in the State Plus network, not to the SAT team. But we do understand there'll be times when leads will go through to the SAT team, and there'll be an opportunity there that we want to actually have in front of a face-to-face planner or a comprehensive advisor that's phone-based, and the SAT team will be able to re-triage that where they see that opportunity as well, which will be a new opportunity for us as a business. So what we'll see, once it goes through the comprehensive advice channel, then we might find during that process that that advice could end up being general, or it could be max super advice, or obviously we would back ourselves that we'll be able to provide event-based or life advice to many of those clients as they come through. So it's just important to get your head around the flow of this, the triage rules, and just an important call out there that the SAT team will actually be housed under the State Plus world, which will give us a great opportunity to identify leads that potentially should be in front of a comprehensive advisor, not the SAT team, so that we can give more comprehensive advice. And I think that we'll see that evolve over time as well. So we move through to the next slide there. Sorry, I should go to slide 51. So there's some ORS transition fee cycle consideration. So again, it talks through some client profiles and just how that will work. And it's on slide 52 through to 54. Again, there's a lot more detail on the ORS stuff, which will help support some understanding around that. If we go to Appendix 3, which is slide 55, there's also some additional client case studies, which can be really helpful for your teams just to understand, one, the flow of leads as they come through the member service centre. Can also help to understand, some different things there around comprehensive advice, either over the phone or face to face. And you can see there's three different examples there as we step through. And the final slide, on slide 60, is just another appendix for everyone just to see the transition plan by region. So I know we've seen this slide a few different times, but just another thing for you to call on if you need it, just to help in terms of your understanding there. So that's it from me. The big thing there is that there's a lot of content here. You probably get a lot of questions from your team. So try and take some time to be prepared for the sessions, and break it up between your champs in terms of how you want to deliver. Think about the timings of it, how many sessions you might need to work through these. Again, don't necessarily try to answer all the questions on the spot there. Take questions down, and we can certainly work on getting responses via the wiki and through yourself and the Champs Network. So you have to think through all those things. The other thing I just will call out while everyone's on the call, I've mentioned it a few times, make sure we're accessing the wiki. There's so much information going up on there. The change team and the single advice team are posting responses to questions all the time. And the more people we can get using that, the better we can share information and answer questions that probably everyone across the network are having. And that will help us all to get a better understanding of how to share this with our teams, and also get our teams understanding the large amount of content we need to work through. The other thing I will call out is that we're looking, and hopefully we get confirmation in the next couple of days, we're looking to do a catch-up learning session for the Champs Network on the 4th and 5th of June in Sydney. So I'm hoping to see some details come out in the next couple of days with agendas and different things to help so that people can schedule some time. And that'll be to get the Champs Network up to speed with where the regional managers are in terms of their understanding and learnings. So keep an eye out for that, and that's looking to be the 4th and 5th of June based in Sydney. So I might pause there and I'll just check back with the team in Sydney just to understand if we've got any questions coming through or anything else that we wanted to clarify. Edevies?
Yep, thanks, Pete. I've actually got 3 questions that have been raised. I've also got Sally in the room to help us if needed. So the first question I've got is, will every SOA reference life advice, even if client doesn't qualify?
That's a good question. No, I don't think so. It's more that it would be that it's over to the advisor to
speak up.
Yeah. Do you want to sit over here?
I've got Sally who'll answer this one.
It'll in effect be a plan and decision as to whether the SOA references it, but it will not always be in there.
All right.
Can I just add that particularly in pre-retirement, where you might well have an outsourcer who will go on life advice in retirement, but can't go on life advice in pre-retirement because of our technology issues, you would be positioning it to them for the future, but that doesn't need to be in the SOA document now.
Okay, thanks, Sally. The second question is, will we need to provide one ATD per account? So one authority to deduct per account. That was actually from Sally Mackey.
Beck, do you remember that? Because that was in the detail that we took out. Do you remember what the answer to that was?
On how many there are?
Whether you need one per product.
I'll check that.
It's just, it would be in an old version.
Yeah.
Yeah.
We'll have to check.
But we'll come back to you on that question, Sally. The next one I have is, what happens if they don't come in for their second review? So they delay the second review for 6 months, for example. Does that mean, oh no, so they delay it for 6 months?
I assume that question is in relation to FPIP. ORS. ORS.
Yes. Yes, it's delaying their review.
Paperwork has to be sent 30 days prior.
Yeah,
It's a 2-year opt-in.
Yeah, it's just well, it's not a 2-year opt-in anymore. That's changing. So in effect, I'm not really understanding if their second review is delayed. Oh, I see. When the client comes in for their first review post-transition, they will be cancelled off their first state ORS contract, and they will be signed up to their State Plus ORS contract. Their State Plus ORS contract will only go for a year. So it will automatically lapse at the end of that year. If the client doesn't come in then, if they're in Kakadu in their caravan or whatever, and then comes in 6 months or any period later, the life advice ORS service will have stopped, but of course they can start it up again at any time when they come in, and but that will of course require that new SOA that would have been done. That second review SOA will be done on the midwinter system. That it's only that first review that is done on the Xplan system.
Okay. Yep. So the next question is with regards to the Champs Day on the 4th and 5th of June in Sydney. I can confirm that that is going to be face-to-face here in Sydney, so it's not an actual webinar, and we will be sending out invites with all the details through to you shortly once we've confirmed everything.
So don't book travel yet.
Don't book travel yet. We'll give you instructions as far as when to book travel when we send out those invitations to you. Next question. Please confirm who we should email for any concerns, questions when we run through the pack. Answer to that question is send it through to the wiki. So any questions, so as Pete mentioned before, any questions that you may have with regards to the engagement packs or even business readiness or that credit card process that I went through earlier, send it all through the wiki. That way you'll see probably the same question being raised several times, and we'll just provide the one answer to that one question.
Oh, thanks. Just with regard to Sally Mackey's question around the ATD, we've just confirmed it is one ATD per product per person. And I'm sorry about that. That's essentially because you need that authorisation for each investment account.
Okay.
Presumably, if it has no issues with the sole purpose test, we could draw it all from the one account.
Absolutely. Yep.
So do you want to repeat that? So presumably it doesn't impact the sole purpose.
No.
Right? Can you say that?
So if the advice allows the fee to be deducted from the account because the sole purpose test is satisfied. So as an extreme example, as long as it's not aged care advice or it's not about Centrelink for someone who is in superannuation, is an accumulation only, yes, it can be taken from one account. Yeah.
Okay. We might do this as a last question. So can a planner do intra-fund advice if they end up in the regional office?
Now, so the pack, when you go through the pack in more detail, it will hopefully clarify this to you, but can I explain it this way? Intra-fund is a legal definition where it is the fund that the advice is about, the super fund that the advice is about, is actually paying the planner to provide that advice. First State Super is only paying State Plus for the SAT team to provide intra-fund advice. So the SAT team is the only group that can provide intra-fund. However, that advice that the SAT team could have provided might have just been supercon, max tax con advice, or it might have just been asset allocation advice. If a normal face-to-face advisor provides that same max super advice, it is called max super advice, it's just not called intra-fund. It will be the same advice, it will be provided by the advisor, but it's not called intra-fund. So that is a difference to what happens now in First State Super, because the face-to-face planners are actually paid by First State Super. When they do max super advice, it's called intra-fund because the fund is paying for it. But now that the face-to-face advisors are going to be working for State Plus, it's not paid for by First State Super. It is therefore not legally intra-fund. You do just provide that advice. It's provided as max super advice. And we at State Plus, we are deciding to do that commercially, to provide that at no cost, because basically we are backing ourselves that we will be able to position the value of advice to these people, and therefore we will be able to position their need for comprehensive advice in the future, whether that's today or whether that's an opportunity that we're going to manage them to in the future. So exactly as State Plus does now for STC, where you commercially have decided to provide free Max Super advice to an STC client, we're going to do exactly the same for First State Super members. However, remember, we are triaging so that you're getting the right sort of First State Super member in front of you who is more likely to want to pay for advice into the future.
Sally, when the SAT team do it and they call intra-fund advice, will they use advice SOS and do the SOAs the same as the regional office?
No. So they actually have to provide intra-fund advice SOAs, which may well literally have almost the same content, but are legally called intra-fund advice SOAs and all that sort of stuff. So in the first instance where we just haven't been able to get the technology into Advice OS, SAT will actually be providing those SAT SOAs off Xplan. But in the next year, those intra-fund SOAs will be put on Advice OS. Again, they will only be used by the SAT team.